everyone, welcome to today's Real Estate Institute of New South Wales webinar. The topic is completing the exclusive buyer's agency agreement. We are pleased to welcome our presenters for today, Jacque Parker and Nick Viner. Jacque is the Director of House Search Australia, a multi-award winning Sydney-based buyer's agency founded in 2005. Jacque is the immediate past president of REBAA, Real Estate Buyers Agents Association, and currently sits on the REINSW Buyers Agent chapter as a deputy chairperson. Jacque has won an REINSW Awards for Excellence in 2009, 2011, and 2014. She is also a contract trainer for REINSW. Nick gained 10 years experience as a property lawyer before moving into real estate. He is now the principal of Buyers Domain, a regular finalist at the REINSW Awards for Excellence. Nick went one step further and won the 2012 REINSW Awards for Excellence for Buyer's Agent. Buyers Domain are members of the Real Estate Institute of REINSW and the Real Estate Buyers Agents Association of Australia. This webinar is live and interactive. You are encouraged to participate by posting questions to the presenters via the chat box, which is located at the bottom right corner of your screen. If you're experiencing any difficulties such as loss of sound during the webinar, please dial 02-8267-0509. This number is also located in the chat box. I will now pass you to Jacque to begin the webinar with.
Hi, thanks Angelina, and welcome Nick. It's really good to participate, I think, in this very important webinar. I know we've got a lot of interest in this. We've got a lot of registrations that Angelina is handling there. So basically what we're going to be doing is we're going to be going step by step through the Real Estate Institute of New South Wales exclusive buyer's agency agreement. And I think it's a good idea for our listeners too, if you do have a written copy of this that you can refer to during our talk, I think that would be most useful.
Right.
We're going to start the agreement by looking at the importance of agreements. And on your screen you'll see for any agreement to be enforceable, it must contain 5 essential elements, that is the 5 Ps. And we're going to go through those. First are the parties. So who are the parties to the agreement, Nick?
Correct. If I can just step in here and say that the material that we're presenting today is just an overview and a guide of the buyer's agency agreement. I do come from a legal background. I'm talking about this more from my perspective as a bush lawyer, going through the aspects as Jacque has identified in relation to the agreement. But if you've got any specific legal questions at any time filling out your agency agreement or beyond, please feel free at any time to call the REI Legal Help Desk. It's a really good facility that's open to REI members. So Jacque, yes. The first question, I guess, taking a step back, is the importance of having a written agreement.
Absolutely.
Now, technically, you could have an agreement that is not written, but in practice, if you don't have a written agreement, then you're not entitled to your commission, and that's your livelihood. So you must have a written agreement, and that comes from Section 55 of the Property Stock and Business Agents Act. And the other aspect to Section 55, so that you are entitled to your commission, are that the agreement complies with the, the regulations, and the regulations set out the aspects that the agency agreement must cover. So that goes back to the 5 Ps, the principal, the parties, those aspects of the agreement that we are going to cover. And finally, and we'll look at this later, in order to be entitled to your commission under Section 55 again, the agreement must be served on the buyer within 48 hours. So those are the 3 key aspects so that you don't lose out on your entitlement to commission. You must have a written agreement. The agreement must comply with the regulations. The REI agreement that we're going to go through, of course, does, and the agreement must be served within 48 hours.
Absolutely, and it's a good point. And it's important to note here too that if it isn't served within 48 hours, there exists, a claim or a possible loophole for buyers to utilise. So, we don't want that to happen. So there's Section 55 on the screen, which you can read there, but what we're going to do is just take a step back and go through the 5 Ps. So parties to the agreement. So who are the parties to the agreement, Nick?
Well, the principal is obviously the buyer, your client, the property buyer, and the agent. So that's you, the agency. with the principal and the agent, it's really important that you get the correct information filled in there. So often you've got a husband and wife scenario with the principal. You must write their full names, and I think it's really important that you get their middle names as well.
Absolutely. And in fact, if we just skip through to the first page of the agreement, you can see here the parties of the agreement. The principal's name's first name and surname of all buyers. And it's important to note here too that if it is Mary Smith and Joseph Smith, we don't write Mary and Joseph Smith. We write Mary Smith and Joseph Smith.
Correct. Yeah.
And also it's important to note that we don't want to leave any blanks in this section.
No.
So where it says ABN, ACN, GST registered, we do need to complete those.
Yeah.
A good line or something that you should write in the ABN section, because we're mainly dealing with personal buyers.
Correct.
And they're not going to have an ABN, is to write nil or not known to agent at this time.
That's a really good point, Jackie. You must be conscious with all the boxes, in fact in the entire agreement, that you do fill them in, even if they may not be applicable. And that goes as well with the parties. The ABN, the ACN details, most often they won't have any. Being a personal buyer, you just put nil there. And whether the buyer is actually registered for GST, you must tick yes or no. Most of the time it's going to be no. But it is really important that you do fill in all the boxes of the agreement, because otherwise there could potentially be an argument that's later down the track that the agreement hasn't been filled in correctly. And then that comes back to your entitlement to the commission. So we've got to be very precise and very accurate filling in the agreement.
Very good. And same with the agency details. Again, on the screen we can see, and this is a section that does need to be completed very accurately, the corporation name of the agent, not the agent's individual name.
Correct.
A lot of people are unsure about this, and we see the licensee's name there instead of the agency. If you're trading as a corporation, it needs to be the name that you are putting in there. Now, we do have a question about that, Angelina.
Yeah, so we do have one from Francis. So do you need a new agreement if one of the parties end up not being on the title due to, say, tax advice?
Might want to answer that. Yeah. I'm not quite sure.
No, that's not really entirely sure what the question is getting at there.
Yeah.
Would it be that if the principal at some point down the track changes, that maybe, say, for example, husband and wife, and then later on the tax advice is that the property is going to go in the husband's name rather than the wife's name, or vice versa, and therefore is it important to change the agreement?
Yeah, might need some clarification on that question.
Maybe we
Francis,
could have some clarification on that question.
Francis, can you just give us a bit more information on that question, and we'll be happy to answer that later on.
Absolutely. Now, moving back to the corporation name, so it's not an individual's name, so it needs to be the full name of the agent.
Correct.
And then in this section where it says trading as, you can write the trading as name.
Yes.
You know, so if your company is called ABC Realty or ABC Buyers Agency, but your trading name is, you know, Domain or House Search Australia, that's where you're going to write that.
And the license number must be the license number of the corporation, not your individual license number.
Yes, very important. And there is actually a note there in the box that has been put there, which states that very clearly, that if you trade as a corporation, the licensee's license number is the corporation's license number.
Yeah.
Now let's just move back to the second part. We've discussed the parties. Now we're going to move on to the actual property details. So let's move to the section of the agreement that we're going to be discussing here. We've discussed legal names. So the actual property, now unlike a sales agency agreement, we're not going to be writing down a specific address here. That would be nice if we'd already found the property for the client before we filled in an agreement, but that's not the case here. So what type of information are we going to be putting in this section, Nick?
Well, it's really important to put, to make sure, as I said before, that you've filled in all the boxes. You've got to put in enough information that gives you enough of a brief to work to. That's really important. But also, maybe don't make it too narrow as well, because that may create a rod for your own back down the track. in terms of
absolutely
trying to find the right property.
And I'd like to point out that the boxes really aren't large enough, you know, to put a specific buyer brief there. So, you know, a good idea is to actually put an annexure to the agreement, and that's where you would put here. So in the first box where it says type of property to be purchased, you could actually put refer to annexure buyer brief or something similar.
You could actually use those words refer to attached buyer brief for all of those boxes if you wanted to. Going through them though, if you want to fill them out here on the first page, type of property, I always put whether it's a house, an apartment or a townhouse, that sort of information. Location of property, you might want to put a region within Sydney, such as the inner west, the eastern suburbs, the north shore, or a kilometre radius
within a certain suburb,
special instructions, sometimes there may not be anything that you can think about, but again, fill that box in. It's not enough to put even TBA, the letters TBA. If you want to put that in, write out, spell out, to be advised, write the full words. Don't just put letters and abbreviations. So special instructions that I put sometimes there would be things like timing, if the buyer's got a specific deadline they're working to, or if they're buying the property as an investment property rather than as a home. I would put that in there.
Absolutely. And the general description of the property to be purchased, usually, you know, I would write something there like, again, refer to the annexure, but you could write something as simple as investment property or principal place of residence there. But just make sure that you don't leave them blank and that they are filled in.
That's right,
Okay, we've got a new question, hopefully about this section.
So Francis have asked, also happens when property ends up in the name of an SMSF.
All right,
details,
self-managed super fund.
Yeah, so details of which often aren't known at time of engagement. Can you add a cover that states or any related party?
Yes, okay. So I think Francis, what Francis is asking is if the property is in the name of a self-managed super fund. Okay. So yes, we do require the full names for that. And before we act on anyone's behalf, obviously we do need to know the name of the entity that we're buying. So it really is quite important.
That's right. And to be honest, in that scenario, there wouldn't be any point in starting the agreement until that information is in place.
Absolutely. And they also need to get, and that raises the point too, we've helped lots of buyers in this situation, I'm sure you have as well, where they are buying a property through, you know, for their super fund. It helps to actually get in touch with the accountant and make sure that the entity name is 100% correct.
Yes,
because that can really hold up and delay a lot of things come exchange and settlement time. Did you have another question?
She's also asked, so can you do an agreement or do a new one?
No, I would actually wait until you have the entity name before starting a search with a client like that. I feel like there's little time to, you know, to waste, and you want to make the search as productive as possible. So get everything lined up first, including the entity name, so that we know who we're acting for.
And look, it can take a long time. I've just signed up a client in the last couple of weeks who I was first speaking to at the end of last year about buying through the self-managed super fund, and I said, well, I need all the information. I need to know the name of the trust entity, and I won't be starting the agreement until I've got all that agreement.
Absolutely.
That information.
And that's best practice too. Okay, let's move on to the next section. We've discussed parties and we've discussed property. Now we're going to be looking at the period of the agreement. So this is actually going on to the statement, the exclusive buyer's agency agreement agency period. Oh, hang on, we actually, apologies, I think that we have missed a section here.
If you're going off the
period. Yes, we do have period first. We do. Okay, well, we'll move on to period then. Okay, so this is actually on page 2 of the agreement. So we might come back to the first page if anyone has questions about that. That is the maximum price or price range. We will come back to that. We've just skipped one slide forward here. So let's talk about the importance of the period, the start and end date of the exclusive period of the agreement. This is actually quite a wordy section. of the buyer's agency agreement, and I do find that people do stumble over the wording here, including clients. So it's really important that we as buyer's agents are able to explain this in English to our clients. So let's go through first of all, the importance of the exclusive period agreement period of time that we work for a client, and then secondly, what all of this means.
Well, the period of agreement, which is expressed here as the exclusive agency period, is the amount of time for which your agreement runs. It's the amount of time for which the retainer fee that you've taken possibly up front from the clients is valid. Now, there's the reason why it has become a little bit more wordy is that after this agreement was redrafted in 2015, some of our listeners may remember that, there's a new paragraph there which is where they've added the continuing exclusive agency period. And that basically means that once the agreement has expired, the initial period, then the agreement automatically rolls over and continues. So just going back to the initial period, that's going to be whatever you've agreed commercially with your client, whether it's 1 month, 3 months, 6 months, something of that nature. And it's best to insert the actual dates where it says in the line for a period from, and then the blanks to insert all those full dates.
Absolutely. And the period, as you said, will vary depending on what type of client you've got, the time frame that you're working with them, and the degree of difficulty too, would you say?
Absolutely.
So if you're looking for quite a unique property that's not going to be popping up very often in the market, you might be working for a longer period of time, or if you're working for a client that has a specific time frame, it might be a shorter period of time. But would you agree with me, Nick, that in practice, most buyers agents in New South Wales seem to have anywhere between a 3 to 6 month agreement?
I think so. Yeah, absolutely.
Okay. Well, let's move on to 2.1 and 2 of the continuing agency agreement. Let's talk about that and what that actually means. So once it rolls over into a continuing agency period, what does that actually mean for the client?
Well, the agreement is still basically on foot until it's terminated or comes to an end, and it can come to an end if you bought the property for the client. It's going to end that way, or otherwise, if the client actually wants to bring the agreement to an end, they can do so. In fact, under this agreement as well, the agent can actually terminate the agreement.
Yes, we'll talk about that later. Now, we do have another question, Angelina.
Yep. So from Rebecca Davis, is there a maximum period of time you can set the agreement dates for?
It's a good question. Look, I think it really depends on the individual buyer's agent and their client. But I mean, what you don't want to do is set yourself up for such a long period of agreement that you are actually preventing yourself from taking on other clients with a similar brief, wouldn't you say?
I absolutely agree. I mean, for the purposes of the agreement, you can have any time period there, as long as you have a start date and an end date. Those are the most important things for the purposes of the agreement. But commercially, I'd suggest that you'd want a shorter agreement rather than a longer agreement.
Yeah, absolutely. And as we said before, I think anywhere between 3 to 6 months seems to be the industry standard, certainly with the buyer's agents we have worked with. Okay, let's move on to, well, let's go back to price. And the other very important P, and that's back on page 1, everyone. So if you do have the agreements in front of you, please refer to the maximum price or price range of the property, which is down the bottom of page 1. Now, again, like sales agency agreements, this is a vitally important part of the agreement. Tell me why, Nick.
Well, if you don't have the amount of money that the client may be, the budget, they may have for the property, you're not going to know how much they've got to spend.
Absolutely. And unlike other agreements too, we always find that it's really important to talk to the client here because some clients actually hold back on their maximum budget. Do you find that?
Yes, absolutely.
And that's, they're hiring us to get them a good deal and at a good price in the market. And they might, they might have 1.1 million, but they're saying to us, look, we don't want to spend any more than $1.05 million. Yeah. How do you handle those types of clients and conversations?
Well, that's a really good question, Jackie. I like to sit down with them right at the beginning and say, look, if we are in a rising market, and that is often the case, buying in Sydney and has been for a number of years now, the situation can be that we set the budget at a certain amount today, but you know, if we're still looking for a property in 2 or 3 months' time, chances are you're going to have to be paying more money. So it's always better that you're absolutely honest with yourselves and me as to what your maximum budget may be from day one, and that way we can go about looking for the right properties straight away. Because I say, you know, in a rising market as well, your budget is going to get you the furthest today. So let's know exactly, have all your cards on the table, so that we can find you the best property. Absolutely,
and you make a really good point too. And I think the second most important thing here is we're put in a very big position of trust and privilege. And I always say to my clients, when we're actually having this conversation around price, if you tell me that you've only got $1,050,000, I won't be considering properties above that amount.
Correct. Yeah.
So if you do have more, now is the time to share.
Yeah.
Because as a buyer's agent, you know, we're very professional in the way that we go about our business. We don't rush off to all the selling agents and reveal our client's maximum budget. That's not what it's about.
No.
So it's really important to have that trust relationship with the price range as well. Obviously, we don't want to spend our client's maximum budget unless, you know, we absolutely have to, and under their instructions, they're willing to, but we do need to have that in writing what that is.
Absolutely, yeah.
Okay, we have a new question around pricing.
Yep. So a question from Grace. Does the rate have to be within a certain percentage?
The price? No. Look, I mean, I think it's common sense. So, for example, if we were spending a budget of 1.1 and we were looking for, I don't know, let's use our retirement as an example. If you were looking for a 2-bedroom or a 3-bedroom unit at our retirement, you know that you're not going to find that for under, you know, 700,000, for example. So you're not going to be putting 500,000 to 1.1. You're going to be putting a realistic figure. And, you know, obviously it's going to have to be within the realms of the market that we're working in. I think that's the most important. I hope that's answered your question, Grace.
Yeah.
Okay, so let's move on to the next section. You can see, particularly if you have your agreement in front of you, the next box is vacant possession, yes, no, or either. That's fairly self-explanatory. If you're looking for a principal place of residence, you would want vacant possession. If you're an investor, you may not. It may not be a big concern. And then the principal solicitor conveyancer. Now, a common question that we have had here is if you're signing up a client, Nick, and they don't have a solicitor or conveyancer, or they're yet to make a decision, what do we do with this section?
Well, in this section here, I write out the words "to be advised." So, going back to what I said earlier, you don't put the abbreviation, just the letters. You write it out in full, "to be advised" for the whole section. That way, as soon as the agreement's signed, the client can go away and speak to the right solicitors straight away, and then they will advise you which solicitor they're going to go with.
Absolutely. And I always say to clients, if they haven't made a decision, to please let us know within a week of the search starting, because, you know, it's always the way, isn't it? You get a client that hasn't chosen someone, and then the first property you look at, you want a contract reviewed.
Yeah, absolutely.
Yeah, so it's really, really important that they have that information.
Yeah.
Okay, so let's move on to the next section, the agent's authority. So we're moving back onto page 2 again. We do have a new question before we move on.
Just going back to that last section. So from Rebecca, if it's to be advised, do you have to check one of the tick boxes?
Oh, okay, where it says solicitor conveyancer. No, not necessarily.
No.
I believe that you can just leave those blank and then just put to be advised.
Correct.
Okay, thanks Rebecca for your question. Okay, so let's move on to the agent's authority. So we've discussed parties, property, period and price, and agent's authority and remuneration are two vitally important parts of the agreement. So if you look at your screen, you're going to be reading part 3, 1 through to 5, which is basically explaining what the agent is doing on behalf of the buyer. So what we as buyer's agent are doing for our client. And there's a number of check boxes there. They're fairly self-explanatory, but they really do go through everything that we do in a full search. I would advise that if you are conducting a full search, that you read this section carefully and know what it is that you are doing for your client and explaining this section to them as well. So,
and really you'd be wanting to tick all the boxes yes. in all honesty, but you must understand what that means both for yourself and explain it to the client.
Absolutely. And some people do, with the first one, the agent is authorised to identify and recommend potential properties to the principal. If you were working, for example, Nick, with a client who didn't hire you for the full search, but they only engaged you to evaluate one property on their behalf, that would probably not be ticked yes.
Correct, yeah, you'd be right. Yeah, you tick no for that one.
Yeah, because it actually says identify and recommend properties, and that's not what we're doing in an evaluation situation on one property.
Absolutely.
So that's a really important point to make for those clients that are only engaging us to evaluate and assess one property. Moving down to the next section, the payment section, and again, this is one of the 5 Ps. This needs to be completed accurately, and you will notice with the remuneration, part 4, that it actually is split into 4 sections which you can complete. So the first part is the retainer fee. Now that is up to each individual agent to set their own retainer fee. I don't know about you, but I think it's really healthy in this environment to make sure that the retainer fee is enough to actually remunerate us for the time spent on the search. I don't think that it's always wise to make it too low. I think it needs to be something around, I know that some agencies charge around 25% of the full fee. What are your thoughts on how much the retainer fee should be?
Oh, look, it's commercial at the end of the day, and it will depend as well on the brief and the amount of the budget. So that can vary enormously.
And also the time spent too. So if you're signing someone up for 12 months, you're going to have a different retainer than you would if you were signing up for 1 month.
Exactly.
Okay. Now, going through this section, would you like to go through the 4 ors?
Sure. Yeah, absolutely. And the first thing is that it's really important to tick the box yes or no if the retainer fee is going to be deducted from the buying fee, which is the entire fee, or not. To be honest with you, because those boxes are sort of hanging a little bit to the right, I've noticed myself filling in the agreements at times, I do confess, that I've noticed that I actually don't tick one of those boxes in because I miss it. I'll always, another tip, when you finish the agreement and you're going through it with the client, I do double check everything thoroughly. But it's often then that I pick it up and I'm, why didn't I tick either of those 2 boxes? So yes or no, as may be applicable, but really important again to fill in that box. Then we come on to the fee, and that again depends on the amount that you're going to be charging and the way that you structured the fee with the client, and again that's all commercial. The first one is if you're going to charge a flat percentage of the price, probably anywhere between 1.5% and 2% of that nature. And notice on the right-hand side that the figure is GST inclusive. So, for example, if you were going to be charging 2% and you wanted to make sure that it was 2% plus GST, you'd be putting the figure of 2.2% in that box to make sure that you get the GST.
And here can I just say too that it's important not just to put the actual percentage number, but to put 2.2% of the final purchase price. Okay, so just like a sales agency agreement, it's important to actually put those words. You don't need to leave yourself open for any interpretation in the agency agreement.
Absolutely.
The next section, so this is in a price range in which the principal wishes to acquire the property. Why would we put 2 different dollar amounts there?
If the amount is going to vary depending on the purchase price. And I'd suggest as well, if you were going to go with a percentage, you might need to fill in those boxes.
Yes, I think it's good practice,
actually. The lower ends and the higher ends.
So if it was 700,000 to the 1.1, actually put what 2.2% is of 700,000 and 1.1.
That's right.
Or a flat fee. Now.
Flat fee, that's probably the easiest. That's just a single figure that you've agreed up front with the client. You put the actual number in there, again GST inclusive, so make sure you add on the 10% and put that figure in there. And finally, or as set out below in the attached schedule, that's where you can have your fee schedule. attached to the back of the
And in
agreement.
price ranges. So for our listeners, so for example, if you've got one fee schedule for a price bracket like 500,000 to $1 million, and another from $1 million to 1.2, they're going to be different. And it's important to put that there because some clients actually do end up spending over their budget. So we want to make sure that we are covered here if they go into that next price bracket. Okay, so we're halfway through. We're going pretty well. I have to speak a little bit faster, perhaps. Okay, so let's move through to the next section. We have discussed part of the fees, but let's move on to the next auction fee. So we're now on page 3 of the agreement. And look, not all buyers agents do charge an auction fee. I think it's important to note that. But for those that do, what's the importance of this section?
Well, if you are going to charge extra for attending an auction, or even maybe going back to your point earlier, Jackie, if you want to tailor this agreement specifically for just targeting one property that's coming up for auction only, then you're going to put your fee for attending the auction there.
Absolutely. And I think it's important to, just going back to, you know, the types of services that we provide as buyers agents, I think it's important to remind everyone that you do need to have a valid agency agreement. Even if it's just a short-term client and it may just be 1 or 2 auctions, having a valid agency agreement is going to cover you as well. But it's also important because it is a contract between you and your principal.
Absolutely.
Even if that's just an auction bidding.
Absolutely.
Entitlement to the buying fee. Now again, this is a you know, a long and wordy part of the agreement, but we do need to know what it means, because what we're basically asking the principal is these are the considerations and the conditions you need to understand as to when the buying fee is payable. So would you like to explain this?
Well, we're now getting onto the really wordy sort of technically legal aspects of the agreement. And again, these are the sorts of things, these are the sorts of clauses that are in here to protect us. And if you ever get into a situation where you're concerned that you may be in a dispute with a client or worried about your ability to recover your commission, again, please call the REI Legal Help Desk because they will be able to inform you better. But this is just an overview. So the first point here at point 4, A, B, C, and D, is really, in short, when the purchaser, who's the principal, is entering into the contract. So there's variations of that, of course. B is if the purchaser procures somebody else. Again, that's to protect us. So we've done all the hard work. We've captured the principal at the beginning of the agreement. That was John Smith. But down the track, John Smith, possibly even to avoid paying you your fee under the agreement, procures somebody else, his wife or a related party, to buy the property, and he says he's not going to pay you. Will you say under this clause, well, you've procured that person directly as a result of the work that I've done to enter into the agreement, the fee will still be payable. Part C covers you where the property is being purchased by a company.
And that could also apply to self-managed super funds or any super fund.
If the entity changes.
Exactly. So if they sign up in their personal names and then halfway through their accountant advises them to buy it in a super fund, it doesn't matter. Our fee is still...
Well, it shouldn't matter. It's always better to be 100% certain and have the right details from the beginning. But if it was to change, those clauses there are to help you.
Yes, that's right, and to protect us and our fee. And moving on to the next section, the payment of buying fee. So this is basically outlining when the fee is payable to us as a buyer's agent and what our fee isn't affected by. So let's walk through those.
So the fee is triggered if any of the events referred to in clause 4.4 have occurred, which is basically the property has been purchased. So I would say exchange of contracts. And then it's on the first to occur of that or completion of the transfer, which is basically settlement.
Yes.
So if you left those clauses as they are unamended, most people would get paid upon exchange of contracts.
Yes, yes. And we always actually explain it to our clients that it's unconditional. It's an unconditional exchange of contracts. We're not going to be taking our fee if there's still a cooling off period. So I think that's important to note. And also it's important to note that the warning box that's there is quite important. The term immediately above provides that a fee is payable under this agreement, even if the purchase of the property is not completed. So if for a number of reasons the purchaser doesn't go through with the property, prior to settlement, we are still entitled to our fee. And similarly, if the vendor elects to not proceed with the property, we've done all the hard work.
Exactly.
So we've got it to exchange.
That's absolutely right. Yeah.
The buying fee, section 7, which is basically putting a termination clause in there. The parties agree that the agent shall be entitled to buy the buying fee at any time within so many months after the termination of the agreement. This is, I think, is a really important clause that we do need to explain to clients, because basically what we're saying to them is even if they terminate the agreement and then they go and buy a property, that we are still entitled to our buying fee. So do you want to explain what this clause actually means?
Yeah, absolutely. And this is a difficult clause that confuses a lot of people. But essentially, again, it's a clause to protect us. I'd suggest the time period in there that you want to put in there is somewhere around about 6 months. And what it means is that even if the agreement is terminated, it's come to an end, you've done a lot of work finding a particular property for a client, and let's say they then actually purchase that property, even after the agreement's terminated, but within up to 6 months after the agreement is terminated, you are still entitled to your full fee.
And it is important to explain that to clients that they understand.
Absolutely, absolutely.
The next part, the entitlement to the actual auction fee. So that is related to the top. So we probably won't go into great detail.
No,
Not a lot of buyers agents actually charge an extra auction fee.
Not separately.
No, it's very unusual. But this box is very important, and we need to explain what this means. And this is why it's important that if you are using the Real Estate Institute form, that you actually use this agreement, the exclusive agreement. So why is this box important, and to explain to the client as well?
Good question, Jackie. Well, there's different types of agency agreements that you may have heard of, such as open agency agreement or sole agency agreement. But here, in this case, we're using the exclusive buyer's agency agreement, and I'd suggest that's the one that we always want to use, because at the end of the day, it means that if anybody else finds the property, such as particularly the buyer finds the property within your agency period, the full fee is still due and payable.
Yes, that's right. And it is important, because the last thing that you want to do is complete all of the work for the client under good faith, and for them to actually not pay you in the end, because it's not an exclusive agreement. And this warning is there for us to be able to explain to clients the importance of that.
And also, you don't want to set yourself up for a dispute. I mean, they may seem like the nicest client, they may beg and plead and say, we're happy to pay your fee if you find the property, but if we find the property, we're not going to pay the fee. You're opening yourself up to dispute, because they're going to always argue that whoever's found the property, and that could have even have been you first, they're not going to pay the fee. So just don't open yourself up for a dispute.
No, it's not worth it. I agree. And also the other important part is if a buyer's agent, another buyer's agent has also signed an agreement with your client, and that's the meaning and the importance of that box too.
Yes.
Because I don't know when you, if this happened to you when you first started, but in our early days, we had a couple of clients come to us who had already signed up with another buyer's agent because they considered their retainer fee was so cheap, they may as well have two buyer's agents running around.
You want to increase your retainer fee.
Yeah, exactly. Well, I did. I learned. So how unfair is that?
Yeah.
So that's the other reason. So that clients understand the importance of engaging you and you only for this process. Similarly, in a sales situation, an exclusive sales agency agreement, is what the sales agent, really needs.
Exactly.
And also, I think it is an expression of trust between you, the buyer's agent, and the client, that they are taking you on board and they're putting their faith in you to do this job for you.
Yeah, yeah. And if they're not willing to do that, then maybe they're not the best client to take
Exactly, absolutely. And I mean, we could talk about the importance of that all day, but I do believe there's another webinar on that subject coming up. Yeah, so that's another one to look forward to. Okay, so let's move on past the box here, the early termination fee and the termination situation. Again, this is this can be a contentious, point of conversation with clients as well. You know, why should they pay us a termination fee if they're terminating clients?
Do you ever fill that one in?
Well, actually, you know what, it really does depend on the client, what we were saying before. So if it's a client we've worked with before, I'm inclined not to put anything in, quite frankly. How about you?
Yeah, I rarely put anything in there, to be honest with you. I think you've got to make some good decisions about which client you're taking on in the beginning and make sure that you've got a really good watertight agreement. You're going to get a lot of resistance if you're charging a termination fee, so you've just got to weigh that all up.
Yes, absolutely. And it is, as you said, it's up to every buyer's agent to decide what they want to do. I think in some circumstances, so an early termination fee can be good if you've signed up a client for a long period of time. So if it was a 12-month agreement and things aren't working out, it could be good to actually put a fee there. The last thing that you want to do is work for 12 months for someone for a retainer that isn't worthwhile, and then for them to actually get out of the contract because they've found a property that they like and buy it after you've done all of the work. So it could be something to consider.
Yeah, absolutely.
But again, make sure that the client understands number 6, the termination considerations too. That's really important.
Yes.
And also how we get out of the agreement. So if we've got a difficult client, and let's face it, those of us that have been in that boat, we may actually elect to terminate the agreement.
That's right, and 6.1 is going to help us there.
Absolutely.
So the agent is going to be entitled to terminate if the principal fails to give adequate instructions or provides false, misleading or contradictory instructions to the agent at any time. So that's your sort of get out of jail card.
Yes. What would be a good example of that? I know that you and I have probably had situations where that has happened, but we may have plodded on with the client. But what would be a good example of them not providing the right information to you? Would you say around budget could be one?
I think at all times in assessing these decisions, you've got to act reasonably.
Yes.
To be honest as well, we can come on to this later, but that particular clause there, 6.1, is the one where I get the most level of resistance from buyers, and sometimes it is negotiated out. I guess the sorts of things that could happen would be if they've set up a specific brief, and that's covered either on the front page of the agreement or through a special annexure, and let's say initially it's for a 2-bedroom investment property, but then it turns into a 3-bedroom home in a totally different area of Sydney. Well, of course you're going to be able to use that clause.
Yes, absolutely. And that's actually, that clause is 6.3, I believe, on page 4. We've got a copy of that. Now, not all of that is on your screen, you'll notice, but if you've got the written agreement in front of you, clause 6.3 actually state if the client changes the location, price range, property type, or other features of the property sought to be acquired.
That's right.
And I think that's really important because getting back to the importance of having an exclusive agreement with a client, in your case, if they change their mind from a 2-bedroom unit to a 3-bedroom house, and you already had another client in that area looking for a 3-bedroom house, then professionally you cannot act for them because you're acting.
And your fees might have been different as well.
Exactly, that's right. So it's important that that is there to protect us, but also, as you say, you do need to assess each individual situation and each client as well. A good example of this is we actually had a client that signed an agreement with us up to, I think it was about 1.5 million. And halfway through the search, they actually came into some more money through an inheritance. So it was very lucky for them. And they were able to increase their price limit by $1 million.
Wow.
So it did actually become a totally different search. But in those circumstances, we didn't want to terminate the agreement.
No.
They were great clients to work with. We just chose to plod on. and we got them a great outcome. So I think you do need to assess it based on the clients.
Absolutely.
Did you have a new question, Angelina?
Yeah. So one from Simone. So,
hi, Simone.
Hi, Jackie and Nick. Can you please provide an example of false, misleading, and contradictory instructions?
Okay, that's a good question. Thanks, Simone. I would say something there would be if a client is actually asking you to do something that is contrary to the Act or something illegal, then you have every right to terminate the agreement.
I think it's contradictory instructions that they've previously given you, though. I mean, I had a client once who, in their original brief, said they weren't looking to buy a property on a main road. And then they were furious with me down the track when there was a particular property that was on a 4-lane road,
highway,
4-lane highway,
yes,
that I hadn't identified with them.
Yes,
and I think that would have been, and in fact possibly should have been, a scenario where I could have invoked clause 6.1.
Yes, and that would have been good grounds for termination. Yeah, that's a perfect example.
Yeah.
Just thinking for myself, if they fail to give sufficient instructions about the brief too, so you can have the opposite where you don't get enough information from the client. That's why it's very important to take these details down. But if it was so broad, you know, that you try to capture everything that the client wanted, and then they argue that you weren't, you know, showing them properties of that nature. I think it's really important that you actually narrow the brief down so that we're both on the same page.
Exactly.
I hope that's answered Simone's question. We have another question.
Yep. Can we have an example of point 2 as well?
Okay, so point 2 is fail to disclose or conceal anything of a material nature which the agent may have an obligation to disclose to a vendor, which may subject the agent to disciplinary action or prosecution. I think this is what I was referring to before. So if the agent is doing the right thing, but the principal actually conceals something of a material nature, this would come actually back to something like material fact, wouldn't you say, Nick?
Sort of. It's the material fact scenario that applies to us as buyers agents rather than it's clearer to see it as a selling agent because there could be something such as a murder that's taken place on the property.
Yes, exactly.
It is hard to think of any examples that may happen with a buyer. But again, these clauses are in there to help us.
And look, I must say I can't think of an example off the top of my head. I'm sorry to the person that asked the question. It hasn't happened to us. But I'm sure that there would be, you know, an example somewhere of a buyer's agent that has actually used that clause at some time. Something we could discuss at our next chapter meeting. We have another question.
We actually do have a lot, but some of these will be answered at the end.
Okay,
so,
all right.
One from Vanessa that's related to this particular topic. So, is it allowable to work with more than one buyer with the same search criteria?
Look, it's a really good question. It is a good question. My thoughts are that I think you have an obligation to the client to represent them exclusively. So if your client was looking for a 2-bedroom unit in our town and with a specified budget, and you had another client that came to you with the exact same specifications, we actually choose not to take them on as a client. It's bad enough, or it's hard enough in this market to be competing against other buyers agents and other buyers, but why should your client be competing with another client in your company? That doesn't make sense to me.
Absolutely.
What are your thoughts?
So look, I agree with you. Fundamentally, your duty is to your existing client that you've already signed up, even if that was yesterday, and then you've got another potential client today who's talking to you about a similar brief. The flip side to that is, you know, sometimes it can be hard to find a new client, and you're keen to take someone on. Sometimes I would say that if you have a detailed enough discussion with the new buyer, and you can see you're absolutely 100% convinced of a way that the brief is actually different, even though, for all intents and purposes, initially it may have sounded very, very similar. But if you work out, perhaps overall the criteria may have been relatively similar, but the first buyer was an investor looking for a particular type of property in a particular price range. The second buyer was a home buyer. Let's say they were a downsider, so wanting to avoid stairs and looking for a particular type of property. There may be a way that you can think of working those two together, but if in doubt at all, your duty is always to your first clients. Don't ever take on anybody where you're going to have a
competition, between two clients. I think it's grossly unfair to the client, and hence the importance of the buyer brief.
Yeah.
And as you said, for example, if you had a client that said no main roads, but you had another client in the same area that said, well, I'm okay with main roads, that could be another.
You may be able to work it.
Yes.
Yeah.
Okay, I hope that answered the question. All right, let's move on. We only have 10 minutes left, so we do want to get through. We're going to move on to page 4, expenses or charges. So you'll see on your screen here, types of expenses, Nick, that a buyer's agent might want to charge the client for or need to charge our principal for. Talk me through those.
Well, the first thing is that they're expenses that have to be fairly incurred during the course of the agent working for the buyer. So there can't be anything else separate to that.
So no pizzas on the run or anything like that.
Personally, I don't put anything in there at all because I think it's better and more helpful for my clients that they understand that the fee is the full fee.
Yes.
But I think if you were going to charge extra things for maybe it's an overseas client and you're spending a lot of time on the phone to them, for example, then you might want to recover the phone charges there. But you're going to have to be quite specific, and also when your invoices for your phone, the billing comes in, you're going to have to detail that and itemize it if ever you need to prove what the costs were.
Absolutely. And if there are no expenses we need to write, nil.
Nil, absolutely.
Don't leave any blanks in the agreement.
Absolutely.
Very important.
Yeah.
Okay, so moving down, expenses and charges. These are fairly standard clauses that are actually in many agreements in the Real Estate Institute of New South Wales. They basically go through and explain that the variation of expenses and charges can't be changed unless they are agreed to in writing by the principal. Financial institution taxes or deductions, I mean, generally, there aren't any of those to pass on. And I think it's important to actually just explain 10. I always explain this clause with clients, the contract for sale. So basically, unless otherwise instructed in writing by the principal or a solicitor acting for the principal, we as buyers agents are not authorised to sign a contract on behalf of the client. And I always point this out because there are some clients that believe if they're not able to be at the auction, we can sign it on their behalf. Well, without a power of attorney, we cannot. So I always point that out. And if we do need to organise for a power of attorney to do that on their behalf, that we have that discussion and set that up with their solicitor. It's an important clause.
I mean, a lot of these other clauses are the very sort of standard REI terms.
Yes.
We may just, given the
Skip
time
forward, yes.
and the amount of questions that I think we've got, fast forward maybe to clause 19, Jackie, do you think? Disclosure of rebates?
Yes, absolutely. Yes, we've got that on the screen now. So this is a very important section that does need to be completed under Section 47, of course, of the Act. If we are receiving a commission or a referral payment from a third party that is related, we do need to disclose this here. So a good example, for example, might be a mortgage broker. We need to complete this documentation by writing the name of the broker, the nature of the relationship. Now, I would write business here, it's a business relationship, and then the nature and value of the estimated amount. So if it was percentage, for example, we would need to write that, or if it was a dollar amount, we would need to write that. It's very important to fill this in, and can you explain to our listeners why it is important under Section 47 of the...
Yeah, absolutely, because if you are getting a rebate or commission from referring a client to a third-party service provider, that must be fully disclosed to the client up front. And it's really important to fill in all the boxes with the correct level of detail, name of third party, put in the actual individual name of the person and their company name, so there's no doubt as to who that is. You're absolutely right, nature of the relationship, business, and the fee. Now, this is a bit of a grey area, what I'm going to say now, but you might have a really good sort of referral arrangement with someone such as a mortgage broker or a building and pest inspector, for example, and there may be no crossover of fees. It may be completely separate. You're not getting feedback or rebate or anything. Technically speaking, it is a best practice, even if that is the scenario and you're not getting a commission, just to put nil. You've disclosed that you've got a particular type of business relationship with that entity. You're not getting any commission for it. The client's not going to be unhappy with you, but at least you've disclosed that you've got an ongoing business relationship with that third party.
Absolutely. And I think it's a really good point to actually disclose that at the beginning. Even if you've got a conveyancer or a solicitor or an inspector that we've worked with before, we know they're good, but to actually show the client that this is who we're recommending to you, this is the nature of the relation, and it's nil, nil, nil. It provides them peace of mind that we're not just recommending them because we may get a fee from them.
That's right.
That makes sense. Okay, we only have 5 minutes to go, so we might just race through the last section, which is the work health and safety principles, authority, acknowledgement, and professional and other advice and disclaimers section. So I think the work health and safety is fairly self-explanatory. 21, I think this is an important clause, and I think that, I don't know about you, but I always point this out to principals, read it in full. The principal warrants that they have the authority to enter into this agreement. Explain the importance of that.
Well, I guess commercially, I mean, if they're not able to warrant that and say that they do have the authority up front to enter into the agreement, then don't sign the agreement because you're setting yourself up for a fall. You could be doing all the work. They may pay the engagement fee, that may be fine, but if they don't have the authority to enter into the agreement and moreover beyond that, the authority to actually buy the property, then you're never going to get paid. So why would you sign the agreement?
A good example we had many years ago was a client whose parents were actually the decision makers. And when we got to this section, she said, oh, well, it's my parents' money. Everything will have to be run through them. So, and that's when you need to, have a further discussion.
That's right.
Because you can't act for a party if they need to refer to someone else who isn't readily available either. It doesn't make for a good transaction.
And how did you resolve that one?
We actually went back and had a further discussion about how we would handle it. And we stressed the importance of, communication, effective and rapid communication, so that we were all on the same page. And in the end, her parents were in agreement, and they were able to make sure that they communicated very effectively with her and in a timely manner, so we were able to bid at auction for them. And then the other professional other advice. So basically, this is really important. We need to disclose to the client that anything, any advice that we are providing is general in nature. We're not financial advisors. We're not acting in the capacity of providing investment advice and and running spreadsheets with numbers for them and telling them how they should spend their money. So it's an important clause.
I think it's a really important clause. I always go through the detail with this particular clause with my clients because at the end of the day, they may be looking to us when they're buying a property to give all this extra advice, legal, strata, building, engineering, town planning, all those sorts of questions that may arise. And as good buyer's agents, we want to give our clients access to the right level of information. Yes, we do. But if down the track they buy the property and there's a problem, the building falls down or the property next door is built up to block out the view or all the sorts of things that can happen, we don't want to be liable for that. So the reason that we're not is because of this clause, and we've explained to the clients up front the full detail in that particular clause. And when you are giving statements to clients down the track, you're representing where those statements may be coming from. And also, at any time, reminding them that this clause applies and that they're ultimately responsible for their own due diligence.
Absolutely, absolutely. And you touched on an important point there too. You know, we do get a number of questions about other fields, and it is important to be able to address those, let the client know the limitations of the services that we provide.
That's right.
And that is, I think, explained well in that clause. And then the last clause, it's a standard disclaimer clause. And just the last box, the signature of the principal and signature of the agent. Again, the importance of the dates here. A reminder about that 48 hours. Okay, so
absolutely.
If the principal's signing on one date and as buyer's agents we're signing after the 48 hours, you know, what are we leaving?
So this goes back to what I said at the beginning about the fact under Section 55 of the Act, if one of the things was to do with the service of the agreement, and if the agreement isn't properly served on the buyer, the principal, within 48 hours of the agreement being signed, then you risk your commission. If you're sitting down with the buyer at a table and going through the agreement and everyone's signing on the same date, no problem at all. And service is, in that instance, by hand. That's effective service. No problems with your commission. Problem arises if your client's not here, interstate, overseas. Technically, under the Act, if they are a long way away, then really your best option, even in 2017, dare I say this, is still by fax.
That's ridiculous. I think they're looking to change that, hopefully soon.
Yeah, hopefully. But there is a clause under Section 55(4) which you might be able to rely on, which basically says that the agent can recover the fees even if the agreement hasn't been properly served, if you satisfy 3 conditions. Failure to serve was beyond the control of the agent. So if the client's overseas, you've done everything you can, they don't have a fax machine, and you've emailed the copy of the client, you've probably got a good argument that you're okay there. The commission's got to be fair and reasonable. Well, you'd assume that it would be anyway. And failure to make the order would be unjust. Well, if you've done a lot of work, you'd expect to be paid for it. So you may be okay. But you've just got to be careful. You've got to make sure that
don't run the risk.
Don't run the risk.
Absolutely. All right. Well, that brings us to the end of our webinar.
So we do have a lot of questions.
Okay.
Right.
So what we're going to do, everyone, because everyone is participating in the questions today, so we'll go a bit over time, maybe another extra 10 minutes, if that's okay with the presenters.
Yeah, that's fine.
Perfect. So that way we can give everyone the opportunity to get their questions answered.
Okay.
So first we'll go with Francis. So do you remember Francis asked a question about the change of parties, the change of, sorry.
Yeah, so this was in relation to the name.
Yes, the name. So she was just wondering, so a question for Nick. How would you sign them up? Without an agreement or another letter?
Well, I would wait until everything is in place. We're going back to that original question. Once you've got the details and you've spoken to the accountant as to exactly what the entity is, the principal, by all means, you know, in the early stages, be very positive and be sending emails to the client about the fact that once you've got all the information, the agreement will look like this. You can send a blank copy. But you just won't be able to sign it until you know exactly who the principal is.
Okay, perfect. Thank you. So one from Simon Reed. So what if your clients are based overseas and you can't serve the executed agreement within 48 hours? Can you scan and email the agreement to your client?
Well, that's a good question. Technically, in accordance with the Act, the options you've got are delivering the agreement personally. Well, if they're overseas, that's not possible. The other option is to send it by fax. We're 2017, they probably haven't got a fax machine. The only other thing that I do is to make sure that if you are serving it by email, that you then satisfy the requirements that I read out in Section 55(4) of the Act.
Yeah. So just got a bit of help here from Robert Anderson, who's actually in Helpline, REINSW Helpline.
Great.
So he's watching in. Agreements can be served by email. So just for the
Wonderful. Thank you,
Okay.
Robert.
Fantastic. Thanks for that clear up.
So scanning and emailing now is an acceptable form,
Great.
which is fantastic. And as we said, even with like with UT box, fax, not everyone has access. So scanning and emailing is the way to go.
Yeah, brilliant.
So we still have a couple more. Sorry, guys. So from Veronica. So for an SMSF, the party name should be the trustees, shouldn't it? Example, John Smith and Jane Smith as trustees for Self-Managed Super Fund.
Yes.
Yes. The full name as per the contract of sale. And again, touching on that, check with the accountant that it is the right name.
Yeah.
Perfect. So another one from Francis. So this agreement covers New South Wales only. If a buyer's agent license in more than one state, is it okay to have a client sign multiple agreements? Or can you use a New South Wales one if the client ends up purchasing one interstate?
No, you must have an agreement for other states.
So
and you must
separate agreements.
Yes, a separate agreement that is specific to that state. Absolutely. And you also need, I think it's good to point out, a buyer's agent license in the state that you will be conducting business in.
Absolutely.
Perfect, thank you. So from Richard, hi Jackie, can you please explain how you change your agreement to reflect the increase in budget your clients had due to inheritance?
Oh, okay. Good question. We did actually complete a new agreement, but the fee was not changed. So we actually did draw up a new agreement with because of course the criteria changed. Obviously they could afford a couple of more bedrooms and a house instead of a unit. So we drew up a new agreement, but the fee was basically, it was not changed from the first agreement. So there was no increase.
Thank you. So question from Michael. Hi Jackie or Nick, do you need to complete a section 47 disclosure form in addition to the exclusive buyer's agent agreement whether receiving a rebate or not?
I don't think so.
I think you would, and if there's not enough room on the agreement, actually, it's a good question because if you actually look at page 5, there's only enough spaces for a limited amount of third-party referrers. So what we actually do in our business is we actually do a completely separate Section 47 disclosure form with all of the providers on it.
Well, the other thing about that is that the Section 47 disclosure has to be made at the time that the referral is made.
Yes.
So if you're setting this up and trying to cover off, the fact that you've got the building inspector and you haven't even found a property, you should be giving the separate disclosure at the time when the referral is made.
Yes. And I think it's a good idea just to have it with every single referrer that you're going to put on there.
Yeah.
If you've got 3 or 4 solicitors, write all of their names, the nature of the business, relationship, which is business, and then if it's nil.
Yeah.
And then we sign that and we get our clients to sign that as well.
Yeah, exactly.
Thank you. A question from Rebecca. So is the exclusive agency agreement the only agency agreement that is able to be used with clients to be compliant? Or is the old SA 00050 form still able to be used as well, either exclusive or open?
It is, absolutely.
It's still there, I believe, with the REI. It's the other form of agreement. This one has been around since 2015, but it is very clearly an exclusive agency agreement, and for that reason is the one that I think most people would use most of the time.
Yes, definitely. To protect yourself and also to provide the very best for your client under an exclusive agreement, I think this is the best one to use.
Yeah.
And REI Forms Live make it so easy.
Yeah.
You can just click on complete the details, and then it's a lot of a. But of course, there are other buyer's agency agreements out there. You can get your own one drawn up by a New South Wales solicitor, and as long as it meets the requirements, and your solicitor will be able to advise you there.
Yeah.
If there's no, absolutely you must use this agreement.
And you can have, in terms of the annexures, we talked about Section 47, we talked about property criteria, we talked about fees, but you might have a page or 2 or 3 of special conditions that you may have got your solicitor to draft up that you can attach to this agreement.
Absolutely, and that's not an uncommon thing to happen. And special conditions, we could have another webinar about those. But they really, again, it's a commercial decision on the buyer's agent to attach those and what those are.
Perfect. So from Michael, so Further to Francis' question, if you're working with a husband and wife party, but only the wife's name is going to be on the title, does both the husband and wife's name need to be written as principal?
Look, I would try and get both of them at the beginning, because as people have alluded to with the questions, things can change down the track. If you've got both of them there at the beginning, then they're both covered. If you just can't ever meet the husband or the wife because one of them's working, and you're pretty clear from speaking to them that that won't make any difference because you're going to be dealing with a decision maker and the person who's actually going to be buying the property, then you take a view on that. But it's always best to get both of them.
And absolutely, and it raises the point too that it's you know, very common for only one partner's name to be on the contract of sale. But we are working for a couple in that case, and I would want both their names on the agreement. Absolutely.
Thank you. So a question again from Francis. So if we happen to also be a planner, can we strike out the professional services clause at our discretion?
Professional services clause. What page is that one on? We have to find it now, Francis. She's still typing away. Oh, okay. Professional and other advice clause. I think that's what she might be referring to, where the principal acknowledges that all advice provided.
Sorry, she's apologised. She doesn't have the latest version in front of her. So.
Oh, okay. Look, I wouldn't be striking out any clauses in this agreement. You're also running the risk of actually making the agreement null and void. And I don't think it's a good idea at all.
I mean, that might be really a very specific legal question that she's best off running past REI
the
legal.
Helpline. Yes, absolutely.
Not a problem. Francis, I can pass that through to Helpline, and we can get someone to contact you, or you can call the Helpline number. So I can message you the contact number. So a question from Meredith. Is this the new agreement, the sole agreement that can be used now? Are the old REI and REINSW ones now invalid? We've answered that.
I think we've answered that. There's two available, and we've only talked about the exclusive one because 99% of the time you're always going to be using that one. But there is another one that's out there which is an open agency.
Yes.
Okay. Another one from Veronica. Is there any problem with the agent signing first and the principal signing within 48 hours?
I would advise against that, actually. I don't know about you, Nick, but I like to make sure that the principal has read the agreement, that they understand it, that they have signed it, and then we sign it. Because if you sign it first and then provide it to them, there could be something that they could change on the agreement. So I think it's best practice for the client to sign first.
Okay, and then our lucky last one. So thanks, Jackie and Nick, for your answers. So this is from Michael. Further to section 47, do you still need to serve a section 47 disclosure form to a client if you're not receiving any rebates?
Yes, we did cover that. So if at any time you are actually referring the client onto a third party, even if there is no money involved, you still complete it and write it.
It's best practice. Yeah, you really should, because you're disclosing and you're supposed to disclose the nature of any relationship, and that relationship could be just a purely professional business relationship, but it's better that you do disclose that even if you're not actually getting paid for it.
And I think it actually serves another purpose. I think it's showing the client that, you know, yes, we're recommending these people, we are not getting any money from the transaction or any benefit. We're doing it for the good of the client because we know that they're great people to work with.
And very often they're looking to us to have all these relationships in place
anyway. Yes.
And when they know that we're not actually getting paid for it, well, they're really happy.
Yes, exactly.
All right, thank you very much. Well, everyone's just sending in their thank yous now. Great webinar. So got one from Richard Evans, Amanda Gold, Kath Dunstan, and Sebastian James. Well said, thank you very much. Great webinar.
Thanks,
so thank you very much to all our attendees for being very patient. Although we have gone over time, retention is amazing. Everyone stayed to the very end. So thank you very much. Thank you to our lovely presenters as well for joining us today.
Thank you.
So. So thank you for participating in our webinar today and completing the exclusive buyer's agency agreement. Please complete the survey at the end of the webinar